Hey guys, what a day. Are you kidding me? The markets are crashing. Then the markets are not crashing. Then looks like they're crashing again. And then looks like they're not crashing. So are they crashing? Are they not crashing? Are they yet to crash? Are they yet not to crash? The simple secrets of trading stocks and options revealed in this video. Now, this is going to be a very brief video, but hopefully it's going to be extremely helpful to some of you that are trading stocks, that are trading options, that are trying to figure out why is that you may be keeping to lose money when things at times are so obvious. Why do you question yourself? Why do you get in the trade? Why do you get out of the trade? Why do you get in again? Why do you get out of the all these crazy stuff? This is what we're going to try to talk. A little bit of a psychology behind why do you take the trade. So let's check this out. Let's take a closer look. What is day trading? Okay, to a lot of day traders, and I talk to a lot of traders every day, guys. Here's where I think a lot of day traders that believe they're day traders go wrong. Day trading to us here at marketcrash.money, okay, trading options means not trading every day. You're going to be like, what do you mean? I'm a day trader. I'm supposed to be trading every day. No, you're not. If you're a day trader, you're supposed to be observing the markets every day. You're supposed to be checking out the charts. You're supposed to be following what the institutional investors are doing. You're supposed to be, keeping track of a lot of various details, which if you take any one of our courses, we'd be happy to share with you what specifically we're looking at that helps us be oftentimes more right than wrong. But the bottom line is you don't want to be trading every day. And you certainly don't want to be changing your mind every day about what your strategy is and what you're doing. So you may be a little bit confused right now. So I've got a chart for you right here. Check this out. So there's different market environments. Okay, and clearly if you're using a certain strategy in a certain market environment and it's been working for you for a while, then you're kind of comfy and cozy, and you're thinking that, hey, I've been doing good. I've got a good strategy, and all of a sudden things may not just be starting to go as well as they used to, and then they get worse. Well, why is that? Because oftentimes a trader that have been successful, for example, in this environment, as we call here market environment 1, clearly the strategy here would be to just simply buy calls. And if you were to just buy calls, you would have done very well. Actually, you wouldn't have to do anything else. Just buy the damn calls. That is strategy 1 that was going well with the market environment 1. Now, what happened in February 2018? Do you remember when all these VIX, funds were going out of business? When, it was crashing from, $120 to $5 in some instances on a couple of these VIX indices that people used to trade. Well, yes, they went bankrupt overnight. Why? Because they did not expect a higher VIX environment. And so the strategy that worked so good for so long over the years in the bull trend market, all of a sudden got them crashed, got them going bankrupt. Okay, the people that lost jobs that worked for these funds, the people that there's just horrible things happen literally overnight because people did not expect a change in the market environment. Okay, and so people that continue to use strategy number 1 in a market environment number 2 got hurt. So if you're feeling the pain right now, if maybe you are the one that's been using this strategy right here, strategy 1 and environment 1, and you've been nice and cozy, and all of a sudden you're like, damn, why am I losing all this money? What's going on? Well, it's probably the simple answer of you still applying strategy 1 in the context of environment number 2, which oftentimes is not going to work as well. So what is the solution? What are some of the things that we suggest? Well, here's the deal. Stop trading back and forth and changing your mind all the damn time. The number one thing that we find a lot of day traders do, okay, is they think that they have to trade every day. They have to make $100 a day. They have to make $500 a day. They have to make, 1,000, 10,000 a day. Whatever that number is that you're shooting for every day, guys, stop it. Stop it now. It's a bunch of bullshit. Okay? That's not how you make money. You don't make $1 million but by targeting $100 a day or $500 a day. You may be confused right now, but I'll explain. Here's what I mean by that. Okay? Just as I pointed out on the previous chart that there's different market environments. Okay? Certain market environments is just not suitable for trading. So if you're trading in a market environment that has the odds against you, you're destined to lose. I mean, I don't care how smart you are. I don't care how brilliant you are. It's just there's certain market environments. If you keep applying the wrong strategy to the wrong market environment, it's not going to work. So a lot of traders are failing because they simply don't realize that. Okay, and when the market environment isn't clear, a lot of times what a trader does is they keep changing their mind. For example, let me demonstrate. Oh no, the market is going lower. Let me buy some puts. Clearly the market is crashing. Okay? I mean, that's the kind of environment when you see the market is crashing, that's where you want to buy the puts so you can profit from the market fall, right? Well, the reality is this. By observing this and buying the put options after the market is down 500 points for the day, what are you really doing? You're simply reacting to what the market is doing. That is a poor strategy. Let me take this a little bit further. What was happening yesterday before the market was crashing 500 points this morning? Well, oh no, it's going higher. Let me buy some calls. Guys, do you find yourself in a situation like this where you're just mesmerized? You're just looking at your screen, and when you see green, you just can't help yourself. But, the market's got you convinced that everything is just going higher. Just like Bitcoin was going higher when it was hitting 20,000 level. People were convinced it was going to 100,000, 500,000, 1 million. It was going to the moon, right? So sometimes when you look at your screen, psychology is playing tricks on you. And if you give in to those tricks, it's going to be very difficult to implement successful trades. So instead of trading emotionally, it always helps, in our view, to have a clear, 100% clear 5-step process on why you're getting into these trades. Because if you're just reacting to what the market is doing, your success is going to be very, very low. It doesn't mean you're not going to be able to catch any good trades. At times you will. But most of the time, you're not going to be able to get consistent because what your strategy is really is just reacting to what the market is doing. So when the market is going higher and it looks like it's going to the moon, what you're going to be doing? You're going to be buying call options. When the market is doing this, when it's dropping and everything looks red, what are you going to want to do? You're going to want to buy put options because you think the market is going to keep falling. Well, the secret is not to react to what the market is currently doing, but rather to be a step ahead of what the market is doing. We posted the video yesterday saying, hey, the market was going to go much lower today. It was going to drop on serious volume. That is what took place. So it's been just a step ahead of the market. And then when sometimes things go against you, when sometimes the trades go against you, the moment that you get into them, being able not to panic, being able to stay with your trades, being able to make clear decisions whether if the trade goes against you, do you cut your losses and get out? Do you actually add to the position? It's being able to stick with your trades and manage them is what's going to determine how profitable you're actually going to be as a day trader or a swing trader for that matter. So unless you got a clear plan and you understand it fully, and unless you fully understand your strategy, why you're getting into the trades when you're getting into the trades and why you're getting out of the trades when you're getting out of the trades, it's going to be very difficult to stay consistent and consistently profitable. So do you find yourself in situations when you're freaking out, when you bought some calls thinking that things go higher and you capture yourself in situations like this, and when the things just hit the bottom and you're like, oh my God, I'm about to make a killing and things just, it looks like they're about to crash, what happens the next day? Or what happens the next few hours? You're like, oh no, things are going higher. And what do? You close your puts options just to find the next day that things are actually dropping again. But at that point, what do you have? You have calls. So guys, stop driving yourself crazy. Stop changing your mind every 5 seconds, okay? Actually have a strategy. Understand why you're doing certain things. And look, let's be 100% real. Just because you have a 100% clarity and you've done your calculations, if you've done your homework, and you've done everything you could possibly do as a day trader, it does not guarantee you're going to be 100% successful. Okay, but I promise you this, it will sure increase your probability of getting more trades correct. And that's what this is all about. Being a day trader is identifying on which days you shouldn't trade, on which days you should trade a little bit heavier. And I promise you, if you understand this, it's going to be this strategy right here, which most of the day traders use, okay? The more day trades you make, the more you will lose. I mean, this is just a typical scenario where somebody just takes so many trades trying to guess where the market is going higher or lower throughout the day. And by jumping in and out of the trades, what you're really doing is you're just hurting your account. Not only you're potentially materializing smaller losses each time you're getting in and out, but you're also raking up a huge amount of commissions, whether you're realizing that or not. I know some of you are going to say, well, but I'm with Robinhood. Who cares? Okay, Robinhood's got to make money one way or the other. Okay, so they either selling you private information, or if you're executing market orders, they're picking up a little bit of change there. So one way or the other, if you overtrade and you're losing, you're paying some way in one shape or form for one way or the other. So the bottom line is this: how do you stay away from taking too many trades? How do you strike when it really matters? Just think about all the trades that you've taken. Okay, if you could eliminate some of the worst trades that you've made on certain days where you've taken the biggest losses, how would your account look right now, guys? I promise you, it would look a whole lot better than what it may be looking at right now. So something has to change. So if you're thinking about this, how can I go to the next level? How can I make things better? Guys, it has to start with a simple process. If you currently don't have a process of why you're taking trades, if you're jumping in and out of the trades thinking, oh, it's a crash, thinking, oh no, it's going high. Okay, if you don't have a strategy for either scenario, okay, if you don't have a strategy of when to get in and when to get out, guys, it's a disaster waiting to happen. So to prevent the disaster, I'm going to share the simple truth. You will not beat the market if you keep reacting to what the market is doing. So my only answer to this is this: you have to have a strategy in place to figure out the moves before they actually happen. My main downfall is this. I'll share my main downfall here. Sometimes a little bit too early in some of the trades. So I may be saying, oh, the market is about to drop, it's about to drop, it's about to drop 500,000 points. I may be a day or two earlier. Well, guess what? I'd rather be a little bit earlier than completely miss the big move. And so by being early, I did not miss the move that actually took place this morning, which was nice. Now, yet, if you were looking at your screen yesterday towards the end of the day, it kind of looked like this. Oh my God, no, the market is not falling, it's going higher. Because towards the end of the day, even though the stocks were trading all-time lows on October 22nd, it looked like actually the market was bouncing. It looked like everything was nice and wonderful. It looked like the next day the stocks were going to rally. So what were you doing? And there's chances you were buying calls thinking, oh, let me buy the dip. Well, you were probably one of the few people buying the dip yesterday, because the stock market pretty much did this today. Actually, this is probably not even a good picture of this, because, you know, it substantially dropped this morning. So how did we identify this? Well, we use a simple 5-step process that's based on divergence, basically being able to identify things before they actually happen. Okay, so if you learn this system, you're going to be able to be more consistent. You're going to be able to identify the moves before they actually take place. So can you imagine how much easier your life would be if you were able to do this? So, you know, this is just a 5-step simple process that can make your life as a day trader significantly easier. Having the process and the strategy does not guarantee, again, that all trades will be successful. However, it will significantly increase your chances. So this is, again, this is what it's all about. Nothing in life is guaranteed. But if you have a process and you stick to it, you're not going to be running back and forth, changing your mind about all these trades and, you know, locking in losses every single time. Guys, trust me, it really pays off to have a strategy, a process, and sticking to it. So if you're wondering what kind of process and how you can implement it, just simply click the links below, take advantage of it. Don't let another day go by where you trade without a simple process that is repeatable each and every day. And there's no magic tricks here, okay? It does not guarantee you 100% of success. But look, when you're targeting using our system 400 to 500% returns, you don't necessarily need to get every trade right. All you need to do is be more than 55% correct. And we will show you how you can do that. You don't have to be a rocket scientist. You just have to follow a simple few steps. So if you're looking to get results, take action now, click the links below, and make this year your best trading year ever. Hey guys, the markets are so fun right now. Look, if you just learned some of the few cool tricks that we show you in some of our training videos, you'll be glad you did. And I promise you, it's definitely going to help you make this year your best trading year ever. Okay, so congratulations on reviewing some of this material. Okay, a lot of it is psychology. A lot of it is having a plan of action. But when you combine the two and you understand exactly what to do and when, that's when you will become the ultimate day trader. So check out some of our material below this video. Check out some of the links. Get some more information. I'll catch you guys on the next video. Thanks for watching.